The Selangor state government has rejected the application for the Petaling Jaya Dispersal Link project, said its caretaker MB Datuk Sri Amiruddin Shari. In a statement on Monday, Amiruddin said the decision was made as the administration is not satisfied with the plans proposed, especially in relation to its social impact on Petaling Jaya residents. According to Amiruddin, the project's approval at the federal level is conditional upon meeting all the requirements set by the Selangor state government. He referred to a concession agreement signed on April 5th, 2022 between the project's developer and the federal government at that time, which was led by a coalition between Barisan Nasional, now partners with Pakatan Harapan, and the current federal opposition Perikatan Nasional. Amiruddin said the agreement is conditional upon the developer undertaking in full the assessment on environmental, social and traffic impact before the project can be activated. The proposed 25.4-kilometre elevated highway, which cuts through Petaling Jaya, has been equated to the now defunct Kinrara Damansara Expressway, which was rejected in 2015 due to the developer's failure to submit traffic, social and environmental impact assessments by the stipulated deadline. The announcement comes as Selangor and 5 other states, Negeri Sembilan, Penang, Kedah, Kelantan and Terengganu head for the state election on August 12th. The PJD Link's concession holder, PJD Link Malaysia, has previously secured 922 million in funding on June 6 to develop the project, which will see MCC Overseas Malaysia as the project contractor. Meanwhile, PJD Link Malaysia has also proposed the reverse takeover of PN17 company SCOMI Energy Services, where the due diligence is ongoing and expected to be completed by September 15th. Bursa Malaysia's second quarter net profit improved by 28% year-on-year to 76.25 million as operating expenses fell on a one-off reversal of the provision of sales and service tax on digital services amounting to 27.66 million ringgit. In contrast, revenue dipped 4.8% to 144.6 million from the 151.9 million it posted a year ago. The stock market operator declared an interim dividend of 15 cents per share for the quarter. As for its half-year results, Bursa Malaysia's earnings ticked up by 3.9% year-on-year to 132.42 million, despite revenue declining 5.34% to 301.1 million from 317.2 million ringgit. Chairman Tan Sri Abdul Wahid Omar says the group is cognizant of the global financial landscape marked by intensified risks and subdued external demands. Nevertheless, he says Bursa Malaysia remains optimistic, backed by the resilience of domestic market demand, the anticipated reversal of international investment flow back to emerging markets in the second half of 2023 and the multifaceted strategies that the exchange is implementing across its markets. CEO Datuk Muhammad Omar Swift said that it is encouraged by potential uplifts arising from the growth potential presented by the relatively attractive valuation of its equity market and anticipated stabilization of the global interest rate environment. Umar adds that these factors, coupled with the recently reduced stamp duty rate on the trading of shares, are poised to attract both local and international investors. Moreover, the group says that through its JV, Bursa Malaysia Ram Capital, it has achieved a significant milestone to launch a new debt fundraising platform, offering small to mid-sized companies alternative means of fundraising, alongside providing more investment opportunities to investors. Bursa Malaysia has also maintained its target of having 39 initial public offerings for this year, which is the highest it's been since 2006, where there were 40 new listings. According to Umar, there are 23 companies due to launch their IPOs in the second half, of which 7 are scheduled to debut on the main market, 2 are on lead market, while the balance are headed for the ACE market. In the first 7 months of 2023, Bursa Malaysia saw 21 new listings, of which 14 were on the ACE market. Mi Technovation said its former COO cum General Manager Chin Yong Kiong has claimed in a court document that the group had defamed him in statements relating to his employment history. Chin, who is now the CEO cum Executive Director of newly listed Edelteq Holdings, made the claim in a counterclaim in response to Mi Technovation's lawsuit against him filed at the High Court in Penang on May 14th. In a boss filing, Mi Technovation said its solicitors were served with the defence to the suit as well as the counterclaim on July 28th. According to the Penang-based semiconductor equipment manufacturer, Chin counterclaimed for defamation against the company for its announcement to Bursa Malaysia Securities on May 17th and the summary write-up prepared by the company's solicitors attached to the announcement. Chin also counterclaimed that the writ filed by the company was an abuse of process. Chin is seeking $3 million in general damages, $2 million in aggravated damages, and another $2 million in punitive damages from Mi Technovation over the alleged defamation. He is also seeking a permanent injunction to restrain the group from publishing the alleged defamatory words. Mi Technovation said it has sought legal advice on the counterclaim, and the company's solicitors are of the view that the company has a strong defense to the counterclaim. Singapore insurer Great Eastern Holdings is in talks to buy AmMetLife Inc.'s Malaysian venture, according to people familiar with the matter, Bloomberg reports. The subsidiary of OCBC is conducting due diligence on AmMetLife Insurance and seeking regulatory approval to clinch the deal, the people said. According to Bloomberg's report, a transaction could value AmMetLife, which the US company jointly owns with AMMB Holdings, at $250 million to $300 million US. An agreement could be reached within the next few months, the people said, asking not to be identified because the matter is private. Talks are ongoing and could still fall apart or face delays, they said. A representative for AMMB said any announcements will be made in accordance with listing requirements. Spokespeople for MetLife and Great Eastern declined to comment. A deal would see Great Eastern prevail in its pursuit of AmMetLife, which the Singaporean firm was interested in acquiring last year. MetLife and AMMB teamed up to form their Malaysian insurance partnership, AmMetLife, in 2014. AmMetLife offers life insurance and wealth protection services through nearly 200 AmBank and AmMetLife branches in the country. It reported about $307 million of gross earned premiums for the 6 months ended September 30th, a 16.7% increase from a year earlier, according to its latest financial report. Property developer Ibraco has secured a contract worth $529.83 million to build the Sarawak Second Trunk Road. In a boss filing, Ibraco said its subsidiary, Ibraco Construction, has received a letter of acceptance from the Jabatan Kerja Raya Sarawak to complete the new Batang Samarahan Bridge and 9-kilometre new 4-lane dual carriageway road JKR R5 standard from Batang Samarahan to Batang Sadong. The contract period is for 42 months, commencing from August 8, 2023 to February 7, 2027. Ibraco said the project will be funded via internally generated funds and external borrowings. It is expected to contribute positively to its earnings for the duration of the project.